I'm going to go ahead and update you guys with the closing of day 7. I actually just sold my VIX at a loss. You can see I pretty much lost a lot of money, and that's going to be okay. I'm going to explain why. So basically, the VIX should have actually taken profits here when the price went up. Okay, had I done that, I would have made like $120. I decided to hold because I thought the yellow line was going to cross. Unfortunately, it never did. So that that poses a huge problem, and as you can see, it started to just channel going down. So I got out just to make sure I wasn't going to lose 100%. So you can see here, the SPY is actually continuing to go up. I'm going to go ahead and draw a channel. It's like right around here. So I believe, sometime next week the SPY will hit 295. I believe if it hits 295, there is a chance it can break the resistance point at 295. And it could potentially go to 300 to 315. And that's just going to be my prediction, just because of what I see in the news. So one of the biggest things is all the states are opening up, just because, they're opening up. People have been staying at home. A lot of people have been getting unemployment. They've been getting about $800 a week, which is a lot more than what most people make during their day job. So a lot of people have plenty of stocked up money. Okay, that's one thing. The other thing is people are just anxious to go out and do something. They don't want to get stuck at home, not do anything. And for most people being stuck for a couple months, the only thing they can think about is spending. And so that's just the consumer mindset. The other thing that I've been looking into is this week the Fed was originally only supposed to buy $4 billion a day in treasury buybacks, but they were actually buying $8 billion a day. And so as a result, the market actually rallied for all 5 days, along with good tech sector earnings. So looking at it next week, the Fed actually just released a statement today. It says they're going to slow the pace. I'm going to show this to you guys. The Fed slows the pace of treasury buying to $7 billion a day from $8 billion a day. So rather than being $4 billion a day like it was supposed to, that was the plan, they're going to only slow it down by $1 billion a day. So as more and more people are pumping money to the economy, just because they have all this stockpile of cash, the Fed is only dropping $1 billion a day instead of $4 billion a day on their buyback. So there's going to be a huge influx of money. So as the money comes in, what's going to happen is there's going to be a lot of momentum that picks up around the SPY. So you're going to see a lot of stocks starting to rally as people start scalping, or they start pumping up, or they start looking for vehicles of investment. And taking that in mind, they're just going to keep buying and buying and buying and buying. And as that happens, the momentum is going to go up and up and up and up and up and up. Another thing to look at is on this 4-hour period, the yellow line made a heavy bounce right off this purple line. It's going to accelerate really, really fast. It's going to get pulled up to this gravitational line, which is right around 294. So I believe if it's getting pulled up to 294 and this channel is showing right around 295, I'm quite confident it's going to at least hit 295 next week. And what I'm saying is it has a high chance of going all the way up to 300. And this is really, this really just makes you more open-minded to not trusting conventional wisdom. So basically, conventional wisdom says, okay, the jobs report's going to be really, really, really negative. There's going to be a lot of people who have literally lost their jobs. There's no money, blah, 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 blah. That's what's getting pumped all over the news. Okay, that's conventional wisdom. You don't want to listen to conventional wisdom, or at least I listened to it this time, and what happened is I got screwed. You never, ever, ever want to trust conventional wisdom if you want to be super successful. So conventional wisdom said the market's going to crash. I trusted it, and guess what? The market rallied. So don't trust conventional wisdom, and if you see the technical pattern that it is going to rally, you need to immediately sell, right? Had I sold earlier on Thursday, I would have profited rather than waiting, and then lost everything as the market continued to rally. But that's going to be all for today. I'm going to see you guys on day 8, which is going to be next Monday. I'm going to focus mainly on just day trades next week, just because the market's going to rally. I believe there's going to be a really good chance for me to make everything back.